Hey YouTube family, it's Stinko, the realtor. There's a lot going on in the car bubble that we have to pay attention to because it could affect the housing prices and make them deteriorate even further down. If we take a look at this article here, by Bankrate, auto loan debt reaches an all-time high of 1.52 trillion, and that was up from the previous quarter of 1.4 something trillion. So that debt just keeps growing. Now, I want to show why that's a bad thing. Big banks set aside billions as they brace for a downturn. Now, if we take a look here, Americans fall behind on car payments at a higher rate than in 2009. At a higher rate than 2009. If people start defaulting on these loans on these cars that are overvalued to begin with, that could just deteriorate the economy. This is something we really have to pay attention to. If this is your first time to the channel or you haven't subscribed, make sure you hit that subscribe button. That way you're notified when new videos drop, so you have all the information that you need in 2023, so you know when to make that purchasing decision for yourself. The other thing is, to help the channel grow, please do me a favor, hit that like button, give me a thumbs up. It'll really help get this video in front of more people so they have that information that's needed for 2023 as well. And if you do need a realtor in Utah, I got your back. I'll always provide current and up-to-date information. Now let's get back to this article. Americans fall behind on car payments at a higher rate than in 2009. If we go down here, we see that, this is just insane right here. Car payments of $1,000 are more than they've ever been before. That's a mortgage. Now, more Americans are falling behind on their car payments than during the financial crisis. In December, the percentage of subprime auto borrowers who were at least 60 days late on their bills rose to 5.67%, up from a 7-year low of 2.58% in April of 2021, according to Fitch Ratings. That compares to a 5.04% in January of 2009, the peak during the Great Recession. Right now, currently, we have higher defaults on the subprime loans, car loans, than we did during that 08-09 Great Housing Recession. If this isn't even being talked about yet, I've been talking about this all of 2022, and it's finally starting to make news in the industry. This is something this is just crazy. There's so much going on in the car industry. Is Carvana going to declare bankruptcy? Now, Carvana, this is a December article, and we're going to get into a whole lot here. There's a lot to dissect. Carvana is one of the nation's biggest car dealers, and they were the third fastest to get into the Fortune 500 company list after Amazon and Google. However, look at this right now. In December, we see here that the stock collapsed almost 98% to just over $4 since its all-time high of $377 in August of 2021. But it gets more interesting. Right here, we see that they adopted the poison pill to limit shareholders from raising their stakes. Essentially, what the poison pill is it doesn't allow people to gain bigger and bigger shares. You can go look into this, bigger shares of the company where they can then force liquidation and things like that. I'm not 100% familiar with the car industry, but just look at this. And now we see that Ally Financial has agreed to $4 billion of auto loans. Why would Ally Bank and Ally Financial, which is the same company, is giving them a fresh source of funding as it tries to restructure its operations? Well, there's always a reason. Detroit-based Ally is one of the nation's biggest indirect auto lenders with more than 23,000 dealer clients, according to Brown, who is the CEO of Ally. For it, Carvana is more than a source of loan applications. The company is a significant borrower with a $2 billion credit line secured by cars. Carvana has $2 billion secured with Ally Financial. Are they going to be the Lehman Brothers of the subprime car bubble? There's just so much information. Look at this. The thing to pay attention to in this article is this right here. Ally is one of the nation's biggest auto lenders with more than 23 dealer clients. That means Carvana is not their only one, just their biggest. What is floor plan financing? Floor plan financing is a simple way in which auto dealers use lenders' money to finance their inventory. In this arrangement, the dealer comes up with a big selection of vehicles that consumers can drive straight off the lot if they want. Until these vehicles are sold to buyers, the lender simply retains their title. The dealer receives payment, including profit, and remits the balance to the lender. The lender then releases the vehicle title to the new buyer. Without floor plan financing, most dealerships wouldn't be able to keep the enormous volume of inventory they need to keep their showrooms ready for same-day sales. I mean, if this isn't signaling 08, 09 crisis of the housing crisis, I mean, this is awful. Cars, the loan to values are just plummeting because car values are plummeting. I mean, the further and further we dig into this, we just see that this is potentially a nightmare situation that the car bubble is in. Car dealers could be going bankrupt. Lenders that are lending to these, that have all these overvalued loans, could be going bankrupt. But yet everything is great. And housing is in a mini crash. I mean, remember this. We went over this article last week. Home prices fell from a year earlier in 20 of the 50 most populous U.S. metros. And we know that Utah didn't release its data until the end of January, and we're on this list. We see that by comparison, the 11 metros were on the previous month. So previous month of this article that was released in January, when they released the December one, there was 11 metros that were negative year over year. Now there's 20. That means 20 metros are double digit, 10 to 20% negative from their peak. I mean, this is just negative year over year. But when you compare it to the peak, these markets are down 10 to 20%. Now, this is another thing to keep an eye out on. Homes in 97% of U.S. cities are overvalued, Moody's says. This is a CBS News article. I mean, 97% of U.S. cities are overvalued. I mean, I guess all of the United States of America just became California. And we are having a mini housing correction without anything popping, without unemployment rate going up, which it's going to, without the car bubble popping, which if it pops to even a small degree is still going to increase defaults, it's going to increase the bankruptcies, liquidations. I mean, this is the stuff that we have to just keep an eye out on. I mean, it just gets worse. This is a Forbes article. Used car prices post biggest drop on record and have much further to fall. And then if we go down here, we see that in December, the prices plummeted 14.9, so 15% from 1 year prior, according to the Manheim Used Vehicle Price Index. And this was released on Monday, marking the biggest ever annual decline for the index, which tracks the prices of used vehicles sold at wholesale auctions. Wholesalers are now buying vehicles at a lower price. We know prices of used cars are already coming down. Now these loan to value ratios that these banks, these lenders have are just awful. And we know that they've set aside, right? Big banks set aside billions as they brace for the downturn. I mean, all of this stuff that we have to keep looking at. This is an article that we went over on one of the previous years. The largest U.S. banks are warning of trouble ahead in the auto loans as dropping prices for used cars risk leaving borrowers underwater. Wells Fargo said that the higher loss rates for loans that originated last year contributed to an increase of write-offs for the period. Ally Financial, here's Ally Financial, the country's second largest auto lender, saw charge-offs for retail auto loans quadruple in the third quarter, and Third Bancorp said it's pulling back on originations. They're not going to originate as many car loans. I mean, the car bubble is something that we 1000% have to pay attention to. If the car bubble pops, that is going to be a nightmare situation, and that is going to cause more and more dominoes to fall. We have the car bubble, which is a car bubble for loans and dealers. We have the world recession. We have the housing bubble. We have the war in Ukraine that's affecting Europe. We have inflation. We have inflation in the world. I mean, there is so much going on that we have to pay attention to. Now, even though car prices are dropping, I mean, look at this boom. This is what loans were, this is just mind-boggling. I mean, I'm lost for words. We see here that even though prices are dropping, even though car prices are dropping, used car prices are dropping, we still see that the car payment, the monthly payment is going up. That's because of the interest rate. These loan to value ratios are awful. A car is not like a house. It's not like a stock. It does not appreciate. Unless you have a classic, a car is not going to appreciate in value. That only happened once, and that was during the pandemic frenzy. All of these cars they just got a year older in January. They will all continue depreciating. These loan to value ratios are just going to keep deteriorating further and further and further. And keep in mind, right? Right there, more Americans are falling behind on their car payments during the financial crisis. The subprime mortgages of 0809 might be gone, but the subprime car loans are still out there. The qualifications are easy. People with 500 credit scores can get $40,000 cars. They don't have the underwriting process that mortgages have now. So that subprime bubble these cars are all depreciating. Just looking at all of this is nuts. And then here are the student loans, right? So if we take a look, there are over 40 million people that have federal student loans. This is bestcollege.com, and their source is the Federal Student Aid, an office of the U.S. Department of Education. Let's say that the Biden cutting off eliminating $10,000 to $20,000 of debt eliminates half. Let's say we have 20 million people that are going to get hit with a resumed monthly payment. Isn't that going to further increase the delinquencies and repossessions on cars? Those are subprime loans. They don't have to take into consideration a student loan debt like a mortgage does. If this isn't something that could potentially by itself cause prices of homes to deteriorate depending on what happens with the car bubble, this is why I'm saying wait to have the March data so we know what's going on with the car bubble. That way we know what's going on with the spring inventory. Once the spring inventory starts flooding the market, we see that the inventory is much higher to start the year off this year than it was last year. Prices are still dropping, and the preliminary report, I pulled it today, and today is the 31st of January. That preliminary report is showing a much bigger decline than I even thought January was going to be. It's showing over $10,000 in the median price drop from December to January, which will be the 8th consecutive month we will see prices drop. Let's follow the information. Let's follow the data. If you need to get a hold of me, if you want to brainstorm, I love when people reach out to me, even if you want to say hi. And if you have any questions, my contact information will be down below in the description. And until next time, have a great day.